Okay guys, so in this video we're going to talk about Netflix stock and one of the reasons why the stock is going down. So as you guys know, Netflix reported earnings last month and it was a really strong quarter, and the stock had actually been up. So while most stocks had been absolutely crushed during the whole coronavirus pandemic, uh, Netflix was one of the stay-at-home stocks that has actually performed pretty well. So if we take a look here, we're currently looking at around a 3-month chart. We can see that the stock is up about 7% over the last 3 months, but the stock has been dropping recently. So currently over the last month, it's down 4%. And as you can see here, I was doing some reading. I know a lot of you guys may have purchased the stock right around this range thinking that the stock would go to 500 or more. So the reason why we're kind of seeing this sell-off is a couple of reasons. The first main reason is that the stock had been up quite a bit. So if we kind of go back and look at a 6-month chart, a kind of a longer term view, we can see that the stock is up around 28%. So the stock had already been on a pretty nice uptrend, and now that a lot of governments have been easing their stay-at-home orders and a lot of people are returning to work and things like that, people are anticipating that there is going to be a less watch time, and perhaps maybe even some subscribers. Maybe some people just purchase a Netflix subscription just for the lockdown, and now that the lockdown quarantine, so now that the quarantine has kind of been eased in a lot of different places, perhaps people are anticipating that people will be canceling their subscriptions. Also, there's also the fact that the stock had ran up quite a bit, and there's definitely a little bit of profit taking. So what I want to show you guys is an example why I'm not selling my Netflix stock, simply because Netflix was the best stock over the last decade, and it's a hyper growth stock. It's been returning about 40 to 45% annually. So this is definitely not a stock that you want to necessarily get rid of. So I'm going to give you guys a couple of reasons why I'm holding on my shares and why I'm actually buying more at this level. So let's take a look at this a closer look at the chart, and I'm going to explain exactly why. So what we're looking at right here is we're looking at a 3-month chart, and I want to draw a couple trend lines. And the reason why I like this, guys, the software I'm using is called Trading View. You can get it at tradingview.com, and I really like this software because it makes it super easy for me to analyze stocks and draw trend lines and stuff like that. So basically what a trend line is basically a way that we can take a look at the direction a stock has been moving recently, and we can also use these same lines to draw support and resistance lines. So basically what I like to do on a stock like this is the first thing I'm going to be doing is I'm going to be drawing simply a direct trend line. So even though the stock is temporarily down, we can see that ever since the massive coronavirus sell-off, the stock has been trending up. So it was from $289 to $400 as the current price. Now remember now that Netflix has always been a strong stock, one of the best performing stocks in probably the last 20 years that I can think of. I mean, if you invested in Netflix, back when they were just a DVD company, you're sitting on a small fortune now. So I think the track record is really important when looking at a stock like this. So now what I also want to do is, first, that's the first line that I'm going to draw, and then I'm going to draw another support line. So the reason why the reason why I'm drawing this support line here is because I want you guys to get a visualization of where I think would be an interesting buying opportunity for Netflix stocks. As you can see here, there was some support at basically around, if I can get this line a little bit better, at around $400. So to make the color, let's change the color of that one so you can see that one easier. So as you can see here, we have support at around $400. So what this means is that this is where the buyers they come in. So as you can see here, there's already some selling off pressure back in late April, and then the stock bounced off $400 and ripped a lot higher to 450. So for some of you guys that bought this stock thinking that it would go a lot higher, one of the reasons why this wasn't necessarily the best trade is simply because of the resistance here. So as you can see here, guys, when a stock kind of hits a resistance point at around $450, you don't want to buy the stock at that point. So I was doing a lot of some reading. Some of you guys out there had previously bought the stock right around this range. this isn't the time where you want to buy a stock like that. You only want to buy a stock near resistance when it breaks out past resistance. So for example, as you can see here, there was resistance at 450. You don't want to buy the stock at 451 or something like that. You want to buy it at 460 or 470, because if that stock doesn't, if the buyers don't keep pushing it up and the volume doesn't keep increasing, you're holding a very, very risky position. So what would be a better strategy is to buy the stock near support. So obviously you have two scenarios that I like to play. I either like to buy the stock when it breaks out past resistance, or much safer one is buy near support. So as you can see here with the support around $400, as this stock continues to get near $400, this is a nice place where I'm going to be coming in and buying shares. So I just picked up some shares today and I'm going to be adding to my position, my longer term position, because Netflix isn't a stock that I like to sell. I use Netflix all the time. I think it's probably, like I said, it's got a great track record and things like that. Best stock of the last 10 years. So in the entire stock market. So this is definitely not a stock that I want to just dump and forget about. Now remember, when you're analyzing charts like this, you definitely want to take a look at the quality of the company. This doesn't necessarily work if the company behind the stock is really bad. An example like, okay, one example like Netflix is like one of the best run companies. I think Reed Hastings is an amazing CEO, and this is a company that continues to add more and more subscribers every month and expand internationally. So this is a good example. So for me right now, should you sell? If you're already down, it really depends on what your goals are. If you're holding this just for a short-term profit trade, then I don't know how long it's going to take for Netflix to bounce back. For me, Netflix is a $500 stock. I just think the company is such a wide moat, and there's really nothing like it out there. But this could take a few months for it to get to $500. Another alternative would be to actually average down your position near support, and just add more shares as it gets closer to $400, and just hope that the stock doesn't break down past $400 and go even much lower. But I still think Netflix is such a high quality company that even if the stock does dip lower, you don't have to worry about the stock dipping down to like $200 or $100 like that. The company is just continually to make a ton of money, and they still had a really, really profitable free cash flow, even though they weren't able to really produce a lot of new content because of the whole shutdown. So guys, for me, I'm going to be adding more at this position. I think the easiest way to look at it is to try to think long term on this. Just think, will Netflix stock be trading at this same level in 2022? As the stock's been returning 44% annually over the last 15 years, I don't think that's a possibility. So obviously you can't look at the past for the future, but a company that is so strong and has such a strong brand, and I can basically go almost anywhere in the world and say the word Netflix and everyone knows what I'm talking about. I think that that's a quality company that you want to buy on dips. So I hope this cleared things up, guys. For me, if you're long term, if you're if you want to hold this position for at least a year, I would buy on this dip. If you're looking for a short term trade here, this probably might not be the best position right now. You've got some other stocks that I think are in a much better position if you're looking for short-term trades. I think cannabis stocks are probably a lot better. And then you've also got some companies that are reorganizing, companies like DraftKings, companies like Nikola Motor, ticker symbol VTIQ, and DraftKings ticker symbol DKNG. And of course, you've got a lot of other stocks that have benefited from the whole transition into basically work at home. So you've got stocks like Zoom Communications, ZM, Slack, ticker symbol work. So there's a lot of other stocks I think guys can get into if you're trying to make quick short-term trades. But Netflix for me is more of a long-term play. I just buy on dips and hold for the long term. So I hope that cleared things up for you guys. So if you enjoyed this video, please smash the thumbs up and subscribe to my channel for new videos. I post videos on the stock market every day. So I hope you guys got some value from this video. So until next time, guys, take care.